All right. So I was looking at the stocks that are doing good and the sectors that were not, doing very well. I made a little bit of notes here. What is still looks problematic for a bull market is XLP. It actually went down this morning, but recovered all of it. That's not what we want to see in a bull market. In a bull market, money does not flow into staples, but it is today. And XLU, it also crashed a little bit. This could also be because of, the higher interest rates today. The 10-year yield is up 7%. I mean, that probably one candle, two candles, I guess, as we guess this one. Actually, I would say just one or two. But I mean, that's a big move for 10-year yield. So that could be why XLU, went down in the morning. But it did recover. So this is not what we want to see in a bull market. XLP and XLU, they are defensive stocks or defensive sectors, but that's what we are seeing still. And these are all, right now it's a mixed tape, I would say. XLK looks good. XLV, it went down a little bit, but this could be a normal pullback. It will probably test the 20-day. Test of 20-day is very common. I mean, 50-day happens much less in frequency, but 20-day happens all the time. Test of 20-day and then bounce. So XLV looks good. XLY, that's Amazon and consumer discretionary. That looks good too. Let's look at Amazon. Amazon isn't doing so well, but XLY is still doing good. Industrials, not a great day, but it's still, chart still looks good. Sorry, chart still looks good. Hold on. XLB, this went down a little. Well, technically with the higher inflation, this is not supposed to, but well, we don't always have the correlation. But XLB still is near the highs. It still looks bullish. That's the REITs. Generally, when the interest rates move higher, REITs generally do not perform. We'll see, but it is still near the highs. Financials has, it's probably forming a base here. It needs to break out of this, and probably I can break somewhere here, break out of that 40, 41 level. So we might, this could be the left side of the base, and maybe it's forming the right side of the base. It has some, digestion that it has to go through. XLC communication. I mean, Facebook is part of this one. This hasn't been doing good. This is probably the only sector that's in a downtrend right now. How come I don't have XLE? Today, XLE did really well. It opened right here and closed on the highs. So for the whole day, energy is an outstanding. Energy had an outstanding move. No drop at all. While if you look at ES, it went up, dropped, retested, then moved higher. And if you look at XLE, it was very strong all day. So that's one of the reasons I got Devon Energy. It broke out today. Hopefully this does not happen again. But we had 4 days of really small moves, and it's a breakout. So I like it. We'll see how that goes. Also, there was some bullish move in which also makes sense for these credit card companies to move higher, because they charge with the base rate plus an extra whatever they charge. So the base rate is going up with 10 years going higher. So this one also makes sense. MasterCard actually looks better. I still have an alert right here. We'll see if there is a follow through tomorrow, or maybe it can move sideways for a few more days and a breakout. That would be even better, better chart if it can move a couple of days to a sideways and break out. What else? We have Visa. Well, MasterCard is still better than Visa. FISV. This one actually broke out, but there is so much supply. I mean, I am trying to figure out other kinds of trades. I mean, I don't see a lot of breakout trades. So if that does not happen, or if I don't see a lot of breakout trades, so these are some of the trades I might have to take. So let me see if it can retest at 106 level tomorrow, 106.50. But and these trend lines do work. This would probably be a very short-term trade. If I buy it here, that would be $3 or $4. And this could be a big resistance. You have 200-day and also the trend line. We'll see. If it breaks this trend line, then it means that we get momentum to the payment stocks. And PAX, this got obliterated. I mean, but it is basing here again. I haven't traded this a lot of these, that base a lot. I mean, after such a big fall, but these can be short-term trades. So those are the payment stocks, and semis did very well, and the Taiwan semi. I put this this one in the webinar channel. So if you look at these, you had, how much is that? That's 8 months, 8 or 9 months. Yeah, 9 months of sideways move, and it's breaking out. Let's see how much distance it is going to travel. It might travel much more than this, but the first target would be somewhere around 147. I was mentioning or comparing this with Lucid. See, it had a sideways move for such a long time, and bam. And this happens all the time, because a lot of sellers, they get out and you get a lot of buyers in here. So hopefully we'll see a move like this in TSM. Obviously, this is a much bigger stock, so we may not see that big of a move, but whatever move we'll get, I'm expecting this to be bigger than this sideways chop. And other semis that look good are Micron. A few more days of digestion and a breakout would be good. I still have the couple of alerts right here, 96, 96. I mean, we have the cup, we want a handle. If it can break the handle, that would be good. And we were talking about the staples, XLP. I think Costco is probably looks better. And among the big box stores, Costco is probably the only one that is looking good. I looked at Target, it is still down a lot. Walmart is also the same. So Costco still looks much better. What else we have? Okay, now I also noted down some of the stocks that did not do good. I had PANW. I got out today. That was a breakout, and when it broke this 542 and got into this digestion, I got out. Well, it closed above 542, but I'm out now. But I also saw that some of the stocks, the software security stocks, they went down a lot. So this PNW could be doing the same thing. So it did not make any sense for me to stay in there. Zscaler down. So most of these software security went down. These are all. And well, we talked about Apple, Micron, Ford. Yeah, Ford is the chart looks amazing. That's a nice consolidation. While the market was struggling, this is a very nice consolidation and a breakout. Well, that's all I have. Let me know if you have any questions. I think I see a couple of questions.
KP?
Yep.
Yeah. Can you just walk us through a little bit on these mega caps with the earnings coming, all the tech earnings in the third week of this month? Anyone who is holding their calls for beyond the earnings time frame, what do you see there in terms of today, as well as your prediction about how it might move in the next 3 to 4 weeks?
I can go through all of them. Yeah, sure. So, well, obviously earnings, nobody knows what's going to happen with the earnings. But,
yeah.
But Apple right now looks amazing. I mean, it broke out. How much time do we have? We have plenty of time, 23 days. I mean, this can move up a lot by then in 20 days. Microsoft is consolidating, obviously. Hold on. It has to break above that level. I was mentioning this, today in the group, that first 1 week we might see some of the sell-off in really big movers that happened last year. People who have made a lot of money, they would probably sell this year because they are, pushing their profits, or instead of paying taxes for last year, they'll pay the taxes this year. That means they're gonna show the profits next year. So that could be one of the reasons why we have seen Microsoft and Google down today. They have been really big winners. But I mean, Microsoft still looks great. I would say, in probably another 2 or 3 days, we'll probably know which direction it's going. It still looks very good. And the way it closed, that's a good close. Anytime on any candle, if it closes above the half of that candle, we cannot take that as bearish at all. It doesn't matter how much percentage down it is. Google still looks good. This is still consolidating. What else is there? Facebook is struggling, no doubt. I mean, I thought it's going to break that 352 level. It did not. So, but again, as I was saying, this whole sector looks the same. What else?
I think before you started recording, you were talking about Amazon as well.
Oh yeah. Well, today that's a very good candle. If you just look at just today's price action, that's a very good candle. But if it has to have a follow through. If it can break at least above 50 and probably above this level, I think that would be really bullish, and we could probably go long Amazon then. Yeah, that doesn't even work. Let's see. Yeah, we'll see. Generally, for any of the hammers, you need to have a follow through. It doesn't matter where the hammer is. So hammer generally happens when when the sellers dry out and the buyers come in. So I would say a break above the 34.70 would be good, and that this could end up being a a cup pattern right here like this.
So
Any other? Yeah, go ahead. Sorry.
yeah, on the Amazon or things like that, like if we want to write some covered calls or the calls against the positions that we are having for the weekly ones before the earnings. For example, in the Amazon case, you said 34.70 break would be good. So does it mean that if I at 34.80 or something is a safe bet within this week, or it could move that much within this week itself? Any kind of an indication that you can read from this chart?
Well, a week is a long time. Okay, let's say
Okay.
if today is probably, if today is Wednesday, yeah, I wouldn't mind selling 34.75 or 34.80. Okay, 2 days it's okay. I mean, the only way to look at these things is how big the candle is. So there is a lot of technical analysis going on here, right? So there are a lot of buyers and sellers. But once it breaks this level, it's going to move fast. Once it breaks this level, it's going to move really, really fast. I mean, we see those right here too, right? I mean, whenever you see a resistance, you see a very big candle. So, but the thing is, Amazon is, I would not sell covered calls for Amazon because of one simple reason. 24%. You're not making a lot. I mean, the risk that you are taking is not good enough. The reward is not good enough for the risk that you're taking. So it might, I mean, if you don't mind losing that stock, yeah, sure. But I think, hold on, 35.52. Let's see that. How much is 35.52? Yeah, that gives about $3, 3.80. Yeah, I mean, that's probably okay. Or else you could probably do buy one of 35.40 and sell 235.50 if you have 100 stocks of Amazon. So
For me, I have only a call position for February expiry. I don't have as many stocks. Right?
Okay. I see what you're saying. Oh, actually, that's then you could sell anything you want. So okay. When is it? You should probably be selling every week.
Yeah, and that's exactly what I'm trying, but I don't really know what numbers to pick. Is it because I paid a lot of money to hold for the earnings?
Yeah.
And I don't want it to lose it within a week. At the same time, I want to see if I can make $5, $6, $7, $10, $20. But it's always that risk versus reward that you're talking about.
So okay. I would not have naked calls at all in a stock like Amazon. The reason is the theta is really high for these. So let's go to February, right? The theta is $153. So if the stock does not move, it loses $1.50 per contract every day. So one way, this is what I would do. If let's say if I have 3,400, right? I'll probably sell 35.50, or if you have 3,500, make it like $100 or $150 away from it and make it a spread. First make it a spread, and then sell a spread here. So there are different ways to look at this one. I mean, let's say if you have 3,400, 3,500 spread for February, okay, you could probably sell 3,450, 3,500 here. So here actually you are selling the spread. So it would be, you see what I mean?
Yes, I understand now.
Yeah. So, and especially for a stock like Amazon, when it's moving sideways like this, you lose a lot of money because it's not going anywhere. That's one of the biggest problems with naked calls. It's not just Amazon, anything. It's moving sideways, you're losing money. So that's why keep it make it a vertical spread, and the spread that you want to sell can be inside that big spread. So for example, if you have February 3400, 3500, you can sell 3450, 3500 of, which expires this week. Or you can, if you don't want to be that risky, you can probably sell 3500 and 3550. So you sell 13500 and you buy 13550. You'll still make like $5 on it, 450 or so. In fact, you can actually sell 2 of these because you already have $100 worth, $100 spread. So you can sell 2 of these.
Yes.
And it's going to be $100 spread. So.
Okay.
But again, if it breaks,
Can you repeat?
Sure.
Can you repeat? I didn't really follow. So
okay. So if you have, let me hold on. Put in the trade and see if I can. Let's say if you have $3,400, 3,500 here. So this is one you are buying, okay? So then you can go back and sell. Let's just make it 1. And this last one. Okay. You can either do 3450 and 3500. You can send actually 2 of them. This will recoup you almost $20. Okay, and if it does not go to 3450, this is going to go to 0 really fast. And because you have your earnings in February, this premium is not going to drop really fast, because that there will always be premium because there are earnings before this expiration date. So
what if it goes to 3450
at the expiration of this week?
Yeah.
See, okay. There are 2 ways you can. I mean, if it closes at 3450, this is going to go to 0. There's nothing to it.
Okay.
But let's say if this moves past 3450, okay, you can actually roll this one, okay, to all the way to February if you want, which is where February 18th. You can roll this to February 18th, which is right now $21. Okay. If you look at this one, right? If Amazon
so here, yeah, one second. So you're in the second vertical, right? You're doing buying 2 but selling 2, right?
But that's only $50 spread.
Okay.
Here it's $100 spread. So
does this need a margin?
No, I don't think so. Nope.
Oh, okay.
Well, because you have this one, this won't need any margin because this is covering you. Yep.
Okay.
So let's say if this thing closes at 3,500, above 3,500 by expiration, this entire thing is going to go to 0. Okay, you're not going to make any money. But if this stays below 3450, you are going to make $50. Okay. And you are actually, in a way, if I look at it, this one right now, this whole trade, this makes so much sense because you're spending only $4. Okay. And if this closes at, but again, 34.50 is so far, so near. I don't know if that's going to really work. I mean, you have a lot of time.
See, the problem with Amazon is like, I'm sure everybody, it moves up and comes down very quickly, right? You can't tell when it is moving up and when it is coming down.
Well, that's true for any stock.
No, but I think Tesla is behaving, but Tesla is mostly upward. It can move downward, but Amazon, no news, nobody can predict. It will just come down $100, right?
That's the reason that's why we look at these levels, right? The reason we look at these levels is when it breaks above 35.50, it's going to run.
Right.
Okay? So that's what we are looking for. I mean, when it's choppy like this, there is no trade. When it peaks out, there is a trade. That's it. That's the only way to survive.
So, Amazon is danger though.
It depends, right? I mean, how much, if you're trading so far away from, its current price, there's no danger in it. I mean, the good part about both Amazon and Tesla is there are a lot of people buying and selling it. Okay. And a lot of, pension funds. If this thing goes down 5-6%, I'm sure there are a bunch of people ready to get in and buy them. That's all they do. I mean, if they want 10% position in their portfolio, every time it drops, they'll come in and buy. That's all they do. So them doing that, it is gonna support the stock, especially at these supports. So right now, 31.76 is a very good price for a lot of people. It bounced here, it bounced here, it bounced here. So as soon as it's the first touch, it's going to bounce. Did I cover all the mega caps? Somebody asked me a question. All right. What's next? All right.
Yes, you did. It was in the mute. I was trying to unmute it. Sorry.
Okay. No problem. Yeah.
Yes, thank you.
Sure. So how to adjust spread? Yeah, that's Arvind, I'm reading your question. The thing is, before you get into the trade, you need to figure out what to do if it moves against you, or if it is moving the way you expected it to move, you make money, you get out. That's it. But if it is moving against you, you need to have these levels. So, for example, if I want to go long at this level for Amazon, look at that, 1, 2, 3, 4. This is an amazing place for me to get out. If it breaks at 3,300, that's a sure shot saying that I am wrong in my analysis, or my expectation is wrong. And right now, if it breaks above this level, I can assure you a lot of buyers will get in right here. And once it breaks above that 34.70, from 34.70, this $80 will happen really fast.
Okay. So if we want to do credit put spread on Amazon for next week, what is the ideal?
Put spreads does not really work great here. I'll tell you why. So I would probably do, I'll probably sell 34.75. Okay. Or 31.75. So let's look at how it is. 31.75.
You don't get much money though.
Of course, that's everybody would do it. That's the reason for that is because of the volatility. It's only 24%. But I mean, if you want to do these things with Tesla, it has huge wall, 69%. Look at that.
Yeah.
That almost triple. 2.5% to at least 2.5 times. So, but again, there comes the safety. Amazon may not give you a lot of money, but the chances of it to go all the way to 31.76 and break that level is very, very low. So you do those kinds. That's what my ratio spreads are. I do ratio spreads, I don't know, probably couple hundred on just Amazon every year. Even if you make $500 on every trade, you'll make 100 grand. So it's not the big trades, especially when you are selling something. It's not the big trades that you look for. Big credit comes with a lot of risk. All right. Any more questions, guys?
So like say for instance,
Yep.
in this instance, 3,300 and 3450, right? 3450 and 3400.
Okay.
No, sorry, 3,300 and 3,350. That's the credit put spread, right?
Yep.
You sell 3,350.
Yep.
And you buy 3,300. It's
Yep.
about $50 spread.
Yes.
Right now, the credit is like maybe $8.
Yes.
So sometimes the 3,300 will be worth more. Sometimes 3,350 will be worth more, right?
That's not possible. Whatever is near the money is always going to be worth more.
Yeah. No, what I meant is like you will be positive. 3,300, you might be positive if it comes down.
Okay. Again, you cannot look at one when you're selling a spread. Your spread, you have to look it as a whole. Okay, you cannot move these assuming that you cannot move one leg assuming that things are going to work your way. And the problem with this one is for $8, okay, of money that you are going to make, you are risking $42. So all you need one day of a move lower and you'll lose for $4,000.
Yeah.
In trying to make 800. And also, this is probably the easiest way to think about this. What if you repeat this trade 1,000 times? Will you make money or will you lose money? So that's whatever strategy that you have, if you can repeat it, thousands of times over a long period of time, will you make money? Will you make a lot of money or will you lose a lot of money? That's why my trades, the spreads that I buy, if it's a $10 spread, I pay not more than $1.60 because I want that $5 spread. Sorry, for $5 spread, I pay not more than $1.60 because that's 1:3 risk reward ratio. So either I make $5 or which is $3.40 or I lose $1.60. You should always look into that, a risk reward, whether that risk that the reward that you're getting, is that enough risk that if you're taking more risk than what the reward is, which it is right here, you're risking $42 to make $8. It's a bad idea. But however,
so if it's like if we are getting credit of $20,
yes,
now it's not, but earlier it was.
When where was it then? That's another question. If it is right here, then that's again right. What is the possibility that this is going to move higher? So you are doing in the money,
right?
Yeah, in the money again. So you are doing in the money means that you are risking most of the money.
Okay.
Yeah.
So does like buying Amazon, like say 100 shares and then doing a covered call every week, is that possible? Because the theta essentially killing and you're like, getting a good.
Well, the thing is, you don't have to do a covered call. Okay, for example, let's say you are doing, if you want to buy the stock and sell 3410, okay? It is the same as selling one put of 3410. That's it. So you don't have to do the covered call. You can just sell this. But what if this goes to 3300? Would you be okay to buy this? And you will be down 70K or $70 or $65. So that is the risk.
Okay.
So that's why if you, I know what you're talking about, but I would think that, go far away and do it instead of doing, and you don't have to do just one. Here you would probably sell one contract, go down and do 10 contracts or 20 contracts. That's probably a little better and lower riskier.
Not spread.
It could be spread. It could be spread.
Because see, the thing is, if you want to do 10 naked, you need a $3 million.
No, I'm talking about the spread.
Yeah. Somehow Amazon has a higher margin than Tesla or any other stock. I don't know why.
That's because the price.
No, it's not just the price. I think every stock has a different margin requirement.
Generally, Amazon should have less margin requirement than Tesla because of the volatility. So what they do is actually no, I'm not accurate. So what they do is if you have a portfolio margin, what they do is they will calculate it by checking if that stock goes against you 15%, whatever the amount of money is required, that would be your margin. But if you have regular margin, what if the stock goes down by 50%, they would want you to have that the money in the account for you as margin. And 3,400, 1,700 is a lot of money for one stock. So that's 100 stocks. That's 170K. Yep. For one, I'm just talking about one.
Yeah.
So that's how it's 3 million. Yep. Hold on, I got another. Okay. Yeah, it's nothing with this. Okay. All right. What else, guys?
Hi, KP. This is Aram. Can you hear me?
Yep. Sorry, go ahead.
Okay. So if we are done with this Amazon discussion, I have one question about Novavax. I think about 3 weeks ago, I asked you about NVX.
Yep.
And at the time, there are so many uncertainties about this stock.
Yep.
But lately, it is seeing some bright side. I'm talking about not about the technical view, but in the real life world. Last year, they have approved for European something like and also they have won the Indian market also.
Yep.
And this morning they have applied for the FDA approval.
Yep.
So with all this, they should go up, but I'm not sure why it still stayed the same today. Can you check?
I know what you mean, but it's not Novavax, it's all of them that went down today. It means that maybe, again, I'm not a fundamental guy, but when it's one among them, then something is wrong with Novavax. But that's not what happened today. All of them went down. BNTX went down, Moderna went down, and also Novavax went down. So there is a good possibility that nobody might require as many vaccinations as they thought. So I mean, this is a moving target most of the time, because we are getting these case numbers, how many people are in the hospitals and how many people require this. And with the again, this is me speculating again, but Omicron seems to be nobody really needs anything to get better. They are getting better by themselves. So if that's true, you don't need any vaccine anymore. People are not taking vaccine at all. I mean, most of the people who wanted to take vaccine, they might have already taken it. But anyways, this is how most of the trading works. If you have an opinion and the price does not agree with you, then you are wrong. Why does not matter. That's how I trade. Okay, and the one thing that I in our webinars and in all our conversations, what I say is, we do not have all those resources to get the information. I mean, we are retail investors. If you are Fidelity, you would have all the information, and these sell-offs even today is based on the information and the analysis they do. All we do is follow them. Okay, so we follow the price action. We are basically following them. They are doing the research. We are, running on their coattails. That's it. So at any point of time, let's take Tesla's example today, right? So when it opened today, I did not know where it was going at that time. Okay, so I bought a little, I waited, but when I look at the price action, okay, I was expecting this to go back to 1120. I posted that pre-market 1119. A test of this one and move higher would be much better for me. But once it did not even make a new low, came here and started moving higher, it means that market, I'm not doing any of this analysis. I'm just watching what the market is doing and following the market. So it started moving higher. I started adding to long term. I started adding more options. Then I added stock. That's because I know that all those institutions are doing the work, and they are the one buying this. And how do I know they are buying this? One way is to look at the volume. I actually haven't looked at the volume. It was about 49% this afternoon when I was buying it, 49% above the regular volume. It's about 19% right now. So whenever we have a thesis and the market does not agree with it, it means we should just get out. We are wrong, that's it. That's the only way to survive in the market. Because most of the time, even in CNBC and all the media, when they are talking about certain information, that information has already been passed, or that information is already being known to all the institutions. So if your thesis is not agreeable with the price action, I would just get out. That's it. And the days like this one, actually, I remember this day I was looking at Novavax, and I was thinking maybe it's turning around. A candle like this tells you that the institution does not like it and they are selling it. It moves higher, and at the end of the day, it moves lower. I think that could be one. Is that the one? Yeah. So not that one, I guess. Which day was that? 12/28. So most of the time, the price action tells you everything you need to know. Everything. What's that? 12:30. That's the 12/28. So it bounced. It actually moved above the previous day and started moving lower, and it closed lower. That tells you that this is actually a stock to short, not to buy. And most of my trading is just based on price action. Is that clear, Sai?
Yeah. So let me ask you this. If I have a few stocks at around $142,
Yep.
what would you recommend?
I would probably, actually you could, generally this is not the setup I buy, but if you still have it, I'll probably, this is the way it closed today. This is not bearish. Okay. If it goes back and moves below 135, I would get out.
Okay.
Yep.
Got it. Thanks.
Let's look at the hourly. Maybe we can get a much better picture. Yeah, it's just consolidating. Yeah, that's what I would do. Yeah, break below the low.
Okay.
KP, these breakout trades, whatever you take, right?
Yeah.
Would you consider that only in the context of stocks, or would you also do that on ETFs? For example, QQQ appears to be consolidating for almost more than a month now.
Yep. Okay, actually ETFs are even better. Okay, the bigger the stock, or an ETF have so many stocks, right? So it's an average of so many stocks. So yeah, the breakouts of ETFs is much better than any stock. So yes, the breakouts would be amazing to get into.
And would you ever enter these leveraged ETFs like TQQQ? And I haven't seen you trade much of those.
Yeah, I'm not, but I used to trade this QLD a lot. But sometimes the options are so, I mean, this one is actually looks good. 40 cents is nothing. Yeah. These work really, really well when you are coming out of a bear market, or let's say 20% correction. Then you can stick with them for, a couple of months, and that would work really, really great.
QLD is 2 times leverage.
Yes. I don't do 3 times. The maximum I would do is 2 times. I used to do this one and SSO for S&P 500. That's this is also 2 times SPY. But yes, ETFs breaking out is amazing to get into. Yeah, we are not far away. This is really surprising. I mean, we had an amazing 5 days move and it's moving sideways. It's absolutely amazing how strong the market is. But the growth is not working though. Hopefully semis will do better in the next few days and it breaks out. It did not break out today. No, actually it did, kind of. Hold on. 315.42. Yeah.
Is 50 a benchmark for growth stocks? Because I see it has fed very poorly lately, right?
Do you have an example?
50, FFTY.
Oh, FFT. Okay. I thought you were talking about 50-day moving average.
No.
Well, this is IBD 50. So what investors.com does is they pick the top 50 stocks based on the relative strength, and it's market cap weighted. So yeah, I mean, but the thing is, the one problem with 50 is that they change it every week, right? And so those 50 stocks keep changing on a regular basis. So I do look at, when I look at this and see that the top 50 growth stocks are not doing good, it gives me a sense of how stocks are doing. But I don't remember trading this much. I might have traded 10 times over my trading career. And if you follow those IBD 50, let's look at. They are not always moving together. There are always stocks that some are doing good and some are doing bad. It feels like you can probably do a look at that. It's like half and half. So that's not what I want. I want to be able to, and it's not very hard to pick and choose stocks from this IBD 50. It's pretty easy.
Yeah, what did surprise me was that I've been observing you trade these growth stocks, right? And I see your returns and results. And when I compare it to how 50 was performing, 50 was really bad. And that's what IBD has always been defending for, right?
Yeah, true. But again, IBD, they are comparing with S&P. This year hasn't been good, obviously. Let's look at how it did in the last 2 years. I don't look at these things, but that's, it probably gives us a good sense of what's happening out there. Okay. So
Is TradingView free, KP?
yeah, well, I think I might have subscription to. Thing is that I don't like ads on this one, so with ads it's free.
Oh, okay.
Yep. And then for my what is that? Crypto trading, this is the only thing that actually gives all the charts. So let's look at 2020. I'm sure 2021, the growth has been amazing. Okay, it's 2020. I'm trying to see how it did since 2020. That's QQQ. Yeah, I really didn't do well even 2020. QQQ did much better. But this is a very good tool to compare stuff. Yeah, I really did not do well at all. How about from here? But, well, it did okay until November. Actually did better here. So yeah, for 2020 it did okay. Actually it did much better than S&P 500. IBD is up what? 85% and S&P is up 60%. So yeah. The best thing to do is pick and choose from IBD. There is no single solution, I know. I have been through a lot of iterations of figuring out which one to trade to get the best results. Believe me, there is no such thing. If anybody can find something like that, he's going to be a trillionaire. So yeah, I can post this in the webinar channel. But these are some of the. I want to do more and more of this. What to give to figure out what happened that day and probably post it. And I'll post it in the what is the channel? Take on the market. This way, if you look at these things every day, you will know which sectors are doing good, which ones are not. That will probably help you much better to understand, which one to trade and which one not to. I'm going to stop recording now.